This isn't a slowdown. This is a full-blown system failure. And RBC and TD are waving red flags. Home sales are collapsing, debt is exploding, and the government's still spending like it's 2020. If this doesn't wake us up, honestly, I don't think anything will. RBC and TD are now publicly sounding the alarm. Canada's housing market is in full-blown correction, and it's exposing massive cracks in our entire financial system. Home sales in Ontario dropped 25% in April, with the GTA falling 33%. RBC calls this one of the most intense corrections on record. TD is predicting a 15 to 20% home price drop from the 2023 peak by the end of 2025. That's not just a pause, that's a full reset. Canada's national debt has passed $1.2 trillion, and household debt to income is now at 185%. This is the highest in the entire G7. Now, this is not just an economic issue. This is a generational risk. We are the most indebted population among the wealthy nations. And it's not just mortgages either. It's credit cards, car loans, lines of credit, and all of it is getting more expensive by the day. Families are renewing mortgages at double their previous rates. Seniors are burning through their pensions just to pay for basic utilities. And banks? They're not waiting around. They're just scaling back credit. There are Canadians getting letters from their banks cutting back approved lines of credit. $500,000 down to $400,000 just overnight. This is happening. And now the Ontario Housing Starts SAAR for May 2025 were reported at 68,800 units, which is up slightly from April, but down a sharp 20.7% compared to the same time last year. That's from Stats Canada and CMHC data. In the GTA specifically, only 1,225 new housing starts were recorded in March of 2025. That's a 65% drop year over year. You heard that right. 65%. That's in a region that's supposed to be absorbing thousands of new residents every month. We're basically building nothing. GTA average home prices also fell 1.1 million on average, down over 4% year over year. Mississauga saw an 11.7% drop. The sales to new listings ratio sits at around 30%, deep in buyer's market territory. Now let's talk about tariffs. The US imports more aluminum from Canada than anywhere else. And while that raises costs for Americans, it also raises them for us as well. Canadian and American steel industries are deeply linked. We send raw material, they fabricate beams, we buy them back. Same story in the auto industry. Parts cross the border up to 8 times before becoming a finished product. In the middle of a housing crisis, these tariffs, or even just the threat of them, could push project costs through the roof. Builders are already behind on housing supply and are now facing new threats. The I-beam most come from the US. If it's tariffed, the cost of every floor, wall, and ceiling in high-rise jumps. Builders could try sourcing locally, but in most cases, there is no substitute, especially for things like Y-flange beams, cement, gypsum, or rebar. If Canada retaliates, we're talking about an all-out materials war. The government already released a list of potential counter tariffs: lumber, windows, shingles, concrete, you name it. Even the hint of tariffs makes lenders nervous. They can't finance a project without knowing what it'll cost 18 months from now. It's just too risky. So that leads to fewer loans, more cancellations, and possibly even investors walking away entirely. And that's where the real danger sets in, because this no longer plays out. The more we lose, not just money, but confidence, and in a market like this, confidence is everything. We built this house of cards knowingly. The government encouraged borrowing, the banks enabled it, and consumers bought in. Because we were all told that this was the only way to build wealth. Buy, buy, buy. We had hoped that rates would stay low forever. Prices would never fall, but here we are. RBC says Canada's economy is now smaller than it was in 2019, when adjusted for inflation and immigration. I mean, that's shocking. So next time you hear someone on the news brag about Canada having the best economy in the G7, ask them what metric they're using, because that's not the reality most of us are living. TD's March 2025 forecast called for a 3.2 average national price drop this year, but even deeper losses in key markets like the GTA. For condos, TD says a 15 to 20% drop by the end of 2025 from the 2023 peak. I feel like we may have already surpassed that at this point. And I don't think that this is temporary. This is a structural reset. Meanwhile, our government is still spending like we're in the middle of the pandemic. New public sector jobs, new infrastructure promises, new programs, and no plan to pay it down. The cost of servicing our national debt is exploding. Billions in interest alone every year, and we're not paying any of it off. We're just borrowing more to cover the interest on what we already owe. And then we're making all these other commitments for, military spending. So where is all of this money going to come from? This sounds like a credit card cycle from hell. You can't solve debt by adding more debt. But that's what we're doing. And eventually, someone pays for it. And this is a bit of a spoiler alert. It's not going to be the ones signing off on it. It'll be me, you, our kids, their kids. This is how currencies weaken. This is how borrowing gets harder. And this is how inflation creeps back in. And that's why banks like RBC and TD are doing more than warning. They're protecting themselves, tightening credit, pulling back exposure to residential mortgages. They're adjusting risk models. These banks make money by lending. But now they're telling you that the risk is just too high. And that says everything. And the second investors and lenders start losing faith in Canada's financial stability, our bond yields rise, our dollar drops, and it becomes harder and more expensive to borrow for everything. We are watching the pressure build in real time. But instead of fixing the fundamentals, our lenders are still pretending that this is fine. Sorry, our leaders, not lenders. I mean, they're promising new programs while avoiding the hard questions about how did we get here? And how are we going to fix it? But you know who's not pretending? I mean, the banks and the numbers. Those things don't lie. So here's what I'll leave you with. This moment right now, in my opinion, is a big wake-up call. The banks are waving red flags. The numbers are telling the truth. Foreclosures are skyrocketing. And the decisions we make this year, I feel like they're very important for our future. All right, folks, thank you so much for watching. Please like, subscribe, and hit the notification bell for more videos like this. And I hope you all have a wonderful day.